What's up, guys? Happy Thursday. It's January 28th. We're just approaching noon. Wild times in the stock market. I wanted to hop on and I wanted to teach you guys a lesson. This is going to be related around the topic of day trading in the stock market, FOMO, fear of missing out. You see it across the board. There's just everybody's talking about the stock market. All these stocks are ripping up, just making insane, abnormal moves. How do you handle that? Do you get FOMO yourself? Do you get all excited pre-market when you see these stocks like KOSS gapping up from $60 all the way up to $180? What's going through your head? Always monitoring your thoughts as a trader is very, very, very important because you could easily get caught up in the hype, the emotions. Always have to monitor your thoughts. How are you feeling? What are you thinking? Sometimes you have to get up and walk away. Go for a walk. Take a break. If you monitor your thoughts and you honestly tell yourself, hey, I got too much excitement going on right now. My adrenaline's pumping. I have to walk away because I am going to make a mistake that I am going to regret later, and it's going to wipe away days, weeks, months worth of hard work as a day trader. That's very, very key. Very key. You have to emotionally condition yourself inside and outside of the markets to successfully do this and do this long term. It's a never-ending process. Never ending. There was so much hype and FOMO on KOSS. And I know a lot of people probably blew up accounts today easily from just chasing FOMO, fear of missing out. They got caught up in the hype, they let their emotions take over, and they blew up their entire portfolio that they worked really, really hard on for days, weeks, months. And look what happened. KOSS, high of $180 pre-market, it's been getting halted all day and it's back down near $30. They've been doing stuff, the SEC, that I've never even seen done before. They've been restricting trades on stocks like AMC. You can't trade it on some platforms. Robinhood, TD Ameritrade, E-Trade. There's no demand for the stock. If they're restricting trading on a specific stock, there's no demand for it. Which in my mind, in my head too, in my thinking, this is a free market. They shouldn't be able to restrict trading on these stocks, all because of the volatility. People should do their own due diligence and manage their risk, but they don't. People just throw their money into the stock market expecting to get rich. And then they put their house up for collateral. It's gambling. That's what it is. It's careless gambling. And look what AMC did. Ran all the way up yesterday to $26. Back down to $13, even hitting $10. And then at the end of the day, running up to almost $20. Imagine swinging this overnight and waking up and it's down to $11. And now it's hitting $7. People are freaking out. They're bag holding now. They won't sell it for a loss. They're hoping that the stock comes back up to $20. It's going to trap a lot of people. And it's going to hurt a lot of people. That's the lesson that I want to try to preach in this video for day traders and swing traders also. Always trying to monitor your thoughts and handle your emotions. Recognize when you are getting emotional and getting caught up in the hype. You have to be careful in this game. Take a step back and realize what's going on here. And I'm just being 100% with you guys. There are people out there that commit suicide and kill themselves over this game. It's a serious matter. You have to take it seriously. I've never seen anything like this before in my career. GameStop hitting a high of $500 and then all the way back down to $111 in one trading day. A $400 move to the downside. What was another one? BBBY, Bed Bath & Beyond. Hitting a high of $58 pre-market, down to $30. There was a lot of great setups today. ACY from 10 all the way up to $35. Now look it's at 10 bucks. Just a straight downtrend all the way down. And you will see traders out there on stock twits and on Twitter. They like trading stocks that get halted like this. For someone that's inexperienced, they haven't been around for a while, this is dangerous stuff right here. The SEC could halt this stock, put a T12 halt on it, and halt the stock for days, weeks, months. And then when they finally reopen it, it's 50% lower, and you just blew up your whole entire portfolio. So a lot of hype and FOMO this morning, for sure. I told everybody in the Discord chat, be very, very cautious today. Don't just chase after anything, because we're going to see a lot of stuff just pop up and fade off. Because there's going to be people out there with their stock scanners. The first thing that pops up on their scanner, they're going to chase after it. Because FOMO is at extreme highs right now. HJLI was a stock that popped up. Look at that. From 950 to 11. Pops up, fades back down. U1 was a stock that quickly popped up. From $7 up to $8, up over $8 to $8.30, back down to $6.50. LLIT gets a run up from 6 all the way up to 17 bucks. Now it's fading back down to 10 bucks. Let's see, what else do we have? CCIV. CCIV, real just random surge pre-market before the open, all the way up to 23. They trapped all the longs, and they've been fading it all day. VIVE. VIVE was hanging out around 350. They grind it all the way up over 4 to 460s. Then they just grind it all the way back down to 330s. MNPR popped yesterday after hours. Slap a trend line on that bad boy. Just a slow decay. All the way back down to 8 bucks. We did have one stock that popped up, GBR, right here. But out of all the stock charts that I've just shown you guys, all of those charts were garbage. Traders that know what they're doing are not just going to chase after that type of stuff. So they're going to sit and wait. They're going to sit and wait And then until they find or the right stock comes along, then they'll go all after it. GBR just kept popping up, pulling back, popping up, pulling back, popping up, pulling back, popping up. And every time it did that, more and more and more and more volume started to enter in on it. It starts to get hit on everybody's scanners. Throughout the day, you notice GBR hit your scanner. 15, 20 minutes go by, you see it hit your scanners again. And then another 15, 20 minutes goes by, you see it hit your scanners again. It's going to get your attention. So if you can recognize this and think to yourself and see it before it happens, that's the psychology part of it, and that's where the smart money gets paid. You got to tell yourself, all right, this keeps hitting the scanners. It's continuously making new highs on the day. Every time it hits a new high, more volume keeps pouring into it. Eventually, this is going to keep popping up. It's going to get more and more people's attention, and it's just going to rocket up in price. There's low supply. It's almost a nano float stock. And what I mean by that, nano float, 2 million shares float. That's a super low float. So that means there's low supply out there for the public to trade. When you have low supply of something and you have a big wave of demand come in and hit that, prices are going to shoot up. It's basic supply and demand in the stock market. That's all it is. That's all it is in the stock market. Supply and demand. You don't need to rely on all of these fancy indicators like parabolic SAR, stochastics, MACD. Sure, they're good indicators, and a lot of them have big cult followings. But what a lot of people do is they let those indicators distract them from the big picture. You hear it all the time, the KISS method. Keep it stupid simple. Keep things simple. Price action, volume. The stock market is revolved around supply and demand. If there's demand for a stock, prices will go up. The stock market is designed for stocks to go up. All right, so Ray says the FOMO was unreal. I could barely sleep yesterday. Kept thinking about GameStop. What if I bought it at $40 and sold at $400? Thankfully, I walked away. See what I'm saying right there? There was a lot of hype on GameStop. We had guys in the Discord chat Wednesday night up until midnight still talking about GameStop and what happened in the stock market. So if you just observe the surroundings, the chat room that you're in, the Twitter community, if you're on StockTwits, which I don't recommend, stay far away from StockTwits. FOMO's at extreme highs. So you want to condition yourself to take advantage of that. Statistically, they say 90% of people lose money consistently in the stock market. So you want to be that 10% that thinks differently. So you got to get creative and think outside of the box. Going back to when I was saying and breaking down GBR and how you have to see it and put it together before it happens. You understand what I'm saying? So that's the big lesson that I wanted to cover and go over, especially for day traders. ZOM still under $1. We were talking about that the other day. I had a video that blew up recently about this stock because it was barcoding. Like this. And it just had a huge move from 6 pennies all the way up to $1.50. And now it's getting everybody's attention and they want to buy in. Same exact story like GameStop. If you notice, yesterday, GameStop was on everybody's news channel. If you got on YouTube and you watch a lot of finance and stock market videos, you notice that every guru out there was talking about GameStop and making a video about GameStop. When you start to see it on the news and you hear other people and people everywhere talking about a specific stock, it's too late. It's too late. And look what happened. The next day, GameStop crashed. Sure, it's having a good bounce right now. I would stay away from it. But let things die down. Let these gamblers out here just throw their money out the window. Be patient, wait for setups that you know. Don't get caught up in the hype. I keep hearing about it's Wall Street bets against the big guys. It's a fight right now between the retail traders and the big hedge funds and the banks. Let them guys duke it out. There's no need to join the fight. And get beat up and destroyed. Let those guys duke it out. Just sit back and watch. Get your popcorn. And ride the sympathy of it. Behind closed doors in the curtain. There's no point in blowing up your portfolio. Something that you've worked very, very hard on. By joining in on the fight. That nobody would cares about. Like, specifically you. If you joined in on the fight, you think that they care that you would blow your account up for the cause? Nope. Let them do it. But that's what I wanted to cover and talk about today, guys, was FOMO and monitoring your thoughts always as a trader. If you're sitting there and your finger's on the buy button and your adrenaline's going, you got to recognize that and you got to walk away. Because it's so, you got to learn to recognize it because it's weird. You got to, as a trader, you have to condition yourself to recognize emotions and your emotions. That's why I always go off of my favorite saying by Mark Douglas. We don't trade the stock markets. We trade our beliefs. Beliefs that we have about the stock market. If you have fear of something, and his example was a dog. If you got bit by a dog when you were a child, when you grow older, you'll have that fear of dogs, and you'll think that all dogs are bad, and most dogs will try to bite you, so you'll stay away from those dogs. If you apply that same concept to your everyday life, like the stock market, you got in on a pump and dump, and you got hurt bad and you blew your account up. That will develop a fear of stocks that run up like GBR like this, because you'll have that fear of it crashing again on you. Stuff like that. And it's stuff to think about. You know, even after a trading day, go sit and monitor your thoughts. What happened? How are you feeling during that specific trade? What was going through your head? Learn from it, move on. If you have a bad day in the stock market, You can't let it affect you. You have to roll with it, learn from it, and move on. Because if you keep thinking about it the next trading day and it's on your mind, it leads to revenge trading. You'll dig your hole even deeper. It's a wild, wild game, guys. It really is. And it took me a long time to actually understand that, because you don't hear gurus out there talk about this kind of stuff. You don't. All they talk about is buying high of day breakouts, buy the dip, sell the rip. That's all they talk about. But then you get BBBY. It keeps dipping and dipping and dipping and dipping and dipping, but no rip. You find yourself down $10 a share. I would say 80% of the stock market is all psychology and emotion, guys. Maybe 10%, 15% of it is technical analysis. Technical analysis is easy. Chart patterns, it's easy. But if you guys are interested in more psychology videos, go into my channel, and on my playlist section, I have a playlist completely filled with stock market psychology. If you're into meditation, I have a playlist for that also. A few meditation videos in there just for traders. You may laugh at meditation. I did at one point, but to be honest, and this is just my personal opinion, meditation has helped me out a lot. Every day before I trade in the market, I sit and meditate for 30 minutes. It helps clear your mind, get in the zone, and it's actually healthy for you, and it makes you sleep better. But I had a bad start to the morning. Here's the psychology playlist right here. There's a total of 14 videos in this playlist. 14 videos. I worked hard on my psychology videos, really hard. I put a lot of time and effort into these videos. So watch them, take advantage of them, take what you will from them. All right, real quickly, we'll get into what I traded real quick. GBR saved my butt today. I was able to make just over 8,000 on GBR right when it was heating up right here. I seen it kept hitting the scanners all morning. It's an almost nano float stock. Nothing was really popping off and going. Everything was failing pretty much. So I said, bet. Got in here at the push over 5. Rode this bad boy up. And then when it consolidated right here, I got back in for that break and push up to $10. So I traded GBR and let's see. I traded U1. U1 was just a real quick pump and dump. That's all it was. So I just traded the momentum on it. Bought 9,000 shares. Made just over $2,000 on it. But the bad trade for me today was MNPR. This was just a mistake right here. This is what I was thinking on MNPR. And this was right when the market just opened. All the stocks were gapping up super huge pre-market. KOSS, ACY. Gapping up really huge. KOSS, ACY, gapping up really huge. So my thinking process on MNPR was, all right, this is pulling back right here, all the way down. Draw my trend line right there. And it was basing out right here at $10. That good mental level that I like to look at. Draw my price line there at $10. So as soon as this popped up over 1050 right here, it surged up to 1150. And I was anticipating this to pop up on everybody's stock scanners and just rip all the way up to 14, 15, 16, and then maybe even run up to $20 again. Because I was going off of what I was seeing pre-market. I knew there was going to be a lot of FOMO. I knew we were starting out with momentum. We could really see some great movers. But I was wrong. Right as it started pushing up over that 1050, I started loading up, buying 2,000 share lots. Buy. 2,000, 2,000, 2,000, a total of 6,000 shares. And then it popped up, and then it slammed down on me, and I waited, thinking it was just pulling back, gearing up for that push up even higher. And it just clunked out on me. And I sold out on it, and I took a negative $7,800 loss to start the day. But I didn't let it faze me. I said, all right, that was a dud. Moving on. Normally, when I trade, if my first two trades are red, I'll call it a day. So starting out of the gates, MNPR, red for the day. And then I took a trade on BBBY also. So I took that trade on MNPR. I was down almost 8,000 on the day. And then U1 started popping off. And I was able to salvage some of what I lost. Like, all right, now I got a good footing. I got a green trade under my belt, getting warmed up. Let's go. Then BBBY, I seen it was in a nice range right here from 45 up to 47, 48. I took a scalp on that for 3,000 shares, made $3,500. So now I'm only down $2,000 on the day. And I'm like, bet. Now I need that one good trade to push me out of the red and up into the green. Being patient, waiting around, waiting. And then GBR pops up. So I start developing a plan, putting it together. I loaded the boat. Sure enough, it started getting hype and momentum. And boom, pushed me out of the red up into the green. Then I was up 5K or 6K. And then I traded it a second time for the final touching to push me up. So I'm up total on the day, $6,000. And then I'll take that. Now I'll walk away. I'm done for the day. That's how you do it. You can't let one trade like MNPR dictate your day. You gotta take the loss, see what you did wrong, accept it, and move on. And that right there, honestly, in my eyes, that is where you separate yourself from the rest. Because not many people could take a loss, a big loss that is like that, and pull themselves out and push up green on the day. So Caesar's post says, can't get better advice than that one, guys. Thanks, Mr. Wolf. I am learning to stay away from emotions while I trading. Thanks, man. No problem. But no matter what, when you're trading, You'll never get away from the emotions. It's human nature. It's in our DNA. We thrive and live. It's all emotions is all around us. The only way to combat it or work with it is to recognize it and just condition yourself. Read books. There are a lot of great books out there on psychology, emotions, human nature. A lot of great books out there. So it's funny. I was watching Connor from Boiler Room Trading like 3 weeks ago, and somebody asked him when he was live streaming, would you recommend people get into day trading and learning this? And I respect his honesty. He said, to tell you the truth, I would honestly not recommend day trading to anybody because it's a very stressful job. It's a very emotional job. This job is not meant for everybody. There are some people out there who wear their emotions on their sleeve, and they can't help that. That's just who they are as a person. But when it comes to trading, you cannot wear your emotions on your sleeve. You will get eaten alive by the wolves. You would. You'd blow up all of your accounts. And if you're the type of person that you're stubborn, you don't like listening to anybody, you're narcissistic, you're always right, you're never wrong, you're only a one-way thinker, you're a negative person, you're a troll, you hate on people that are doing better than you. I would never want to hate on anybody. If anything, I'd want to see people do good and better than me, because I know the struggle. But dang, I've been preaching a lot, guys. But it's a valuable lesson, I think, especially for today. Especially for today. I know there's a lot of emotion going on out there with everything that's going on. Not only in the stock market, but your personal life, what's going on in the world. It's crazy times. Another one of my favorite sayings is, your first thought in the morning could change your whole day. All it takes is one positive thought in the morning to change your whole day. GBR, there could still be some opportunity on it. Let's see, what's GBR at for volume? Volume on the day is at 40 million. So they've rotated that float 20 times. It's only 2 million float stock. Heck yeah, this stock's still in play. This stock could run up over 10, up to 15, 20 bucks if it wanted to. If nothing else pops up, and GBR is like the only stock in play and active for the day, everybody will come to this stock. I'd be cautious right here, though, because volume's starting to die down on it. We're in lunch hours. Maybe at the end of the day, it'll get that run up. I mean, it could even run up right now. What do I know? You know, I said JILL yesterday wouldn't keep pushing up, and it did. Right here. And I was just going off of the fact that volume was drying up on it. And this thing ran from 550 all the way up to 850. Just be careful on GBR. It's a nano float. Nano float stocks, what they love to do, they love to flush it and grind it up. And when I say flush, I mean death candles. So you could see it push up over high of day, like I might have a good example of it. Yeah, right here on OBLN last week. And this is what I mean, guys. Take snapshots of charts and save them and study these moves. Look what they did here on OBLN. It wedged out right here. And at that break over $10, they popped it to $10.75, but then they ripped it all the way down to $8.50. A $2.25 death candle. Imagine chasing after that and getting met with that. You bought 1,000 shares at the break of 10, and it quickly pops up and you didn't lock in your profit, and then they slam it down $2.25 in a blink of an eye. That's a $2,500 loss. So that goes to show the saying, you chase, you die. You chase breakouts, you die with the death candle. And then it kills your ego, your motivation, your confidence. And then you go into revenge trading and you blow up your account even more and dig your hole even deeper. It's an emotional game. See? They popped GBR up to $9.90. Now it's back down to $9. And watch, it'll probably slam all the way down to $7.50. It'll get a big death candle on it. In a blink of an eye, it'll just go splat. Alright, if you guys haven't already, hit that subscribe button, join the Trading Learning 101 community, where we all grow as traders and investors. I have over 400 educational videos for free on my channel. I know my videos are fire, and I know I talk about stuff that nobody talks about. The secrets that they all hide from you guys, and then they charge you $150 a month to get. I've been around doing this for over 5